Good afternoon and welcome to HCM's FX Week Ahead Look Ahead webinar with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. Good to have you guys on board. If someone could just type in the question panel that they can hear me okay, that would be great. Just type in hi or let me know that the sound's coming through okay. It's always reassuring to know that you're being heard. So I just want to check that. I can see that I'm sharing the main screen and yeah. Thanks, Sean. That's great. I'm obviously coming through. So just as folks are coming in to the webinar and as we're getting started, just run through the disclaimer. The whole point of this Monday look ahead webinar is not to provide trading signals as such. What the point of this webinar is to look out for future scheduled events and unscheduled events in the market that will be market moving, and looking at what I expect as a professional trader, those moves to be based on what the market expectations are. So the actual execution of trades, if you trade, with stops and targets, that's not covered in this webinar, and it's certainly not intended to be a signal service. So just to make that clear, it's important because obviously market dynamics change so quickly, particularly if people are new or beginning to trade. You know, the dynamics and the outlook can change so quickly that unless you're keyed into that underlying story, you can easily get caught out. And really, that's really what this is trying to do, is to explain what some of those stories are in the market so that you're prepared and ready for the change in the stories, because that's where we get the most opportunities when sentiment or the mood of the market changes. But before, of course, you can recognize a mood change, you have to know what the expectations are. Like, so for example, you know, if I said, when you come to my house, we're going to have some a lovely roast dinner. Okay, that's very traditional here in the UK, and if you went round on a Sunday to someone's house, you would traditionally have a roast dinner. So that would be your expectations. You're going to have a roast dinner if you came to my house. However, if when you came to my house, I said, oh, sorry, no, we're not going to eat at all. I've just, I've got a packet of crisps in the cupboard. You'll be disappointed because your expectations for a roast dinner, but I've only given you a packet of crisps. In a very similar way, the market does exactly the same thing. And we're going to go through a worked example with this in terms of the UK election that's coming up this week on the 12th. So we're going to be looking at what the market's expecting. And as the outcome deviates from those expectations, we'll see where the best opportunities may or may not lie. So that's just a way of explaining the disclaimer, really. But it's an important point to grasp. Without further ado, let's go into the major event that I'm expecting, and this is the biggest event that I'm expecting for the week, and that's the UK election that's taking place on Thursday, the December the 12th. It's one of the first UK elections in December for around 100 years, and of course the reason we're having this election at an untimely time in the UK is purely due to the difficulties Britain has in withdrawing from the EU. That Brexit process has been extremely difficult for the UK, and it's resulted in a lot of volatility in the pound. So what we're going to look at now is we're going to look at what the market expectations are. And whenever you're trading, you always want to know what the market expectations are for each currency. So I'm going to explain now what the market expectations are for the pound and have been for some time. So first of all, we'll notice that from October the 10th, the pound has been gaining value. So I'm just going to pull up a pound US dollar chart and then drag it across onto the screen. There we go. And we're going to see from around 10th of October. Sorry, let me go to a daily chart. It's easier to see on the daily chart. So there we go. From about the 10th of October, we've seen the pound rallying. It went up, almost parabolically from 1.22 up to 1.300, and we're now at 1.3100 and above. So we've risen around over 900 points in the pound. And the reason the pound rallied on this day was because there was an announcement by Boris Johnson and an EU representative. I can't remember whether it was Juncker or who it was, but the announcement was that it was a withdrawal agreement bill. And that was fantastic news for the pound, because it meant the chances of a no-deal Brexit had become less likely, and the pound was bid on this optimism that a withdrawal agreement bill would actually ultimately get through Parliament. So that's what happened. However, just go back to my PowerPoint. The problem PM Johnson had is that he tried to get his deal through Parliament, but he didn't quite have enough of a majority. So what PM Johnson has had to do is had to call a general election in order to try to get more Conservative seats to try and get his withdrawal agreement bill through UK law. So the expectations now, and this is why the pound has been supported, because a number of polls have been coming out. Now, a poll is simply a questionnaire, if you like, of what people's future intentions are. And these UK political polls have simply been questionnaires about what people's future voting intentions are. And those polls have shown that people's future voting intentions are for a Conservative majority. And that's why the pound is continuing to be bid, because the market is expecting the Conservative majority to get in. And if the Conservative majority gets in, they're much more likely to be able to pass PM Johnson's withdrawal agreement bill. That's why the pound at present is being bid and bought. Okay, so remember what we said about with expectations. I said, imagine if you were coming around to my house and I'd said to you that, you know, we're having a roast dinner. That's what you'd be expecting. So in a similar way, market participants are expecting a Conservative majority win. That's why the pound has been bought. That's why people have been buying pound on the dips, buying pound from this range. And if you follow the Telegram channel, which I contribute to, you would see that on a number of different occasions, when there has been some, you know, positive poll data out, I've been saying that the pound has been expecting pound buyers. And that's all, you know, what the market expectations are. However, there is a note of caution. And the note of caution is this. So if you look at the 2016 referendum, let's go to the weekly chart, you can see that in the 2016 referendum here, okay, the expectations were that that Britain would, in the referendum, would decide to stay in the European Union. The polls were predicting that the UK would stay. However, those predictions were found to be completely out of sync, and Britain actually voted to leave the EU. That's why there was this big move in the pound. You can see it moved from the high here, 1.5, just touched 1.5 on this data feed, moving down to 1.2. So you can see, you know, that's 3,000 points that the pound sold off from the highs of that day. So the 2016 referendum was wrong. And the next the election, what happened is Theresa May won the UK election, but she had another election because she wanted more of a majority. The polls were saying that the Conservatives were, you know, roaring ahead in the polls, and she called an election and she lost seats. So it was really a case of things going completely wrong, and the polls were wrong again. Apart from this one poll called the MRP poll. Now, you need to be aware of this MRP poll, because the way that polls are asked is a little bit unhelpful in the UK. So often the polls will simply just ask a cross section of 1,000 people and ask them, would you vote Conservative, Labour, Lib Dem, Brexit Party if there was an election today? How would you vote? And then you get a percentage. The problem is that doesn't work for the UK electoral system. We have an electoral system which is first past the post. So in other words, the country is divided up into...
From German CDU, Zymac says that we
turn my squawk off. Sorry about that. the MRP poll constructed that poll slightly differently, because when you just ask the percentage of people and you get a figure like 42% of people are Conservative and only 30% of people are Labour, the problem in the UK is it's divided up into these different constituencies, different segments, and each of those segments have different amounts of people in them. So what you're actually assessing is how many people vote in that segment. It's not like it's not like people say, well, okay, 60% of people voted Conservative, therefore we will have a proportionate number of seats in Parliament that represent 60% of the UK. That doesn't work like that. So you can get funny results. So you could get quite a high percentage of votes, but quite a few seats. So that happened with the Brexit Party, or when it was called UKIP. They got quite a high percentage of votes, but I think they only got one seat in Parliament, and that's because of the way that the calculations are made. So as a result, there was this MRP poll. Now, this MRP poll tries to make allowances for some of the particularities of the UK electrical system. That is why the market pays more attention to this poll, the MRP poll. So when the MRP poll comes out with something, pay attention. Particularly because the market pays attention, because the way that it's calculated. And the 2017 UK election polls were wrong, but this MRP poll was correct. So it has got some form. But what I'm trying to say, the big point, is the referendum was wrong in 2016, the UK election was wrong in 2017. So if you're a trader, taking a bet on a definite UK majority win, be cautious. And in fact, the market placement has triggered a big jump in demand for downside protection. So the pound 1 week risk reversal skew, which includes the December the 12th election, has moved in favour of sterling put options for the most in over a year. In other words, this is when the market is concerned about a negative coming event. That's when you get this spike in put options. It's the right to sell a currency at a particular price. It's the right but not the obligation to sell. And the reason you take out those put options is when you're really concerned about what the future price will be, and you're concerned about a negative event. So you can see here, this is an indication that the market is preparing itself for a negative event. Now, obviously it may not happen, and then you might see a strong reversal, but just helps to be aware. 16 referendum wrong, 17 UK election poll wrong. What will happen in 2019? Now, for what it's worth, I think that there will be a Conservative majority. So that's the market expectations, and I think that will be, and that's what the MRP poll is currently saying as well. So that's what I think is my personal favourite for what that's worth. So again, you're not trying to always be right in the market. You're just trying to know what to do when things change. So this is what would give a dovish shift. Okay, if there was a Labour victory, that would result in pound selling. So I'd expect pound sellers. Okay, be aware of that. That would negate that pound upside. But be aware, it's quite nuanced, because a Labour win also makes a second Brexit referendum more likely. And the Brexit referendum is asking the British people again, do they really want Brexit, or do they want the Brexit that PM Boris Johnson has negotiated with the EU? What kind of Brexit do they want? And the polls on that put the UK to vote to stay in the UK if asked again. So just to be aware that although I put a dovish shift, be aware that a Labour victory, what I'd expect in this instance, I'd expect a drop. Sorry, I expect trying to draw a line there. Let me just see if I can draw a line. I would expect something like this. I'd expect a drop in the pound. Oh dear, not doing this very well. There we go. Oh, this is disastrous. My apologies for this. Right, I'd expect a drop in the pound, and then at some point the market will start thinking, well, hang on, this can be a second Brexit referendum, so then I expect that drop to be reversed. The difficulty is, when will the market focus on that? So that's something to be aware of. Be looking in on news feeds, and if you have a squawk service, that's really what you want a squawk service for, to try to keep you in. But if you haven't got a squawk service, just be aware of that. Labour victory, likely see pound selling, followed by, at some point, the market will realise, oh yeah, hang on, but this actually means a Labour win, which means a second Brexit referendum, which means people are more likely to say we'd rather stay in the EU, scrap Brexit completely, which of course would be a big recovery in the pound. And we saw how far the pound fell from the 1.5 level. So there's at least 2,000 points of price to make up in this scenario. Okay. Timing will be the issue. That's the only extra point I put there. Now, another dovish shift would be if there was a hung parliament. So say the Conservative Party won, but they haven't got enough to form a majority. In that situation, that's likely to be negative for the pound, because remember, the reason PM Johnson has called an election is to try and get his withdrawal agreement bill through Parliament. And if the Parliament's hung, in other words, the Conservatives have won, but they haven't got enough to form a majority, it means PM Johnson can't get his withdrawal agreement bill through the UK Parliament again. So he's stuck. So that no-deal Brexit option re-emerges. So in a hung Parliament, Conservative win, expect a negativity for the pound. But again, what you have to be aware of is how is a coalition formed, and what are the terms of that coalition. Obviously, Theresa May, when she lost seats, there was a hung Parliament, but she formed a coalition with the DUP, and that changed the balance there. So just to be aware that hung Parliament would be immediately pound negative, and then the question will be what kind of coalition is formed and on what terms. Okay, so be aware of that. The Conservative victory. So say the Conservative majority, they get the victory, then in that instance, what I'd expect is bullish pound into the event, and possibly a buy the rumour, sell the fact response. So when you have a buy the rumour, sell the fact response, you have that when an event has been expected for some time. And you can see here, since October of this year, you can see the pound has been expecting this rally, okay? Expecting a Conservative majority win. So the pound has been rallying up. Now, eventually, when the event occurs, if the Conservative majority do get in, I would be looking out for a buy the rumour, sell the fact response. So all the people who have gone long take their profit, and there's no one extra to go long, so the price ends up doing the opposite of what you think. So buy the rumour, sell the fact. It's a very, very common market dynamic, one to be aware of. Could easily happen here. Now, just to be aware, a few technicals. So there's a pivot point around this 1.3200 level, and then we also have, on the weekly chart, then we also have this overhead resistance, 1.3300, and above that we have the 200 exponential moving average at 13350. So this is strong overhead resistance. So in a kind of sell the rumor, or in a kind of buy the rumor, sell the fact response, what you might typically expect in that kind of thing is a spike up here and then a selling back down. So spiking in and selling off. That's the kind of price action that I might be expecting. But I have to say, it's a tricky one to call. So I'm not saying that that's definitely how I would trade the event, but it's certainly an outlook that I'm being aware of. And in the election event, I will be making a decision at the time on the 12th. So here's some currency pairs to consider. If the outcome is dovish, then I would expect pound New Zealand dollar sellers. The New Zealand dollar has been supported recently. There was increased capital requirements for New Zealand banks that came out last week, supportive for the New Zealand dollar. As long as the US-China trade war seems to be making progress towards a phase 1 deal, the New Zealand dollar should benefit and stands to benefit more than the Australian dollar. So in that situation, if the outcome is dovish, then pound New Zealand dollar sellers. And if the outcome is bullish, and that optimism Conservative majority carries through. Maybe there's some, good news about how the agreement and the future trade relationship between Britain and the EU looks. Then I'd expect euro pound sellers. The outlook for the euro is weak. We've seen low growth and a poor outlook as expected for the eurozone. So in a bullish pound scenario, euro pound sellers make sense to me. That's what I would be looking for. Well, I know we've spent quite a bit of time covering the election, but you can see how big events they have been in the past. They're going to be huge events. You don't want to be going into this market situation unprepared and just in the pound around the 12th of December. Be very, very aware. There could be some, extreme volatility in the pound. Could be having 100, 200, 300 pip moves, and then sudden reversals. So be prepared for that, and certainly watch your leverage. Do not trade. I recommend you don't trade with high leverage because those big moves and high leverage will quickly put you in very great difficulty in your account. So check your risk when you're doing that. We will now go to the rest of the week ahead. So I will just pull up the calendar, and we'll look at what we've got coming up for the next week. Just bear with me. There we go. Just pulling up on the other screen, and there we go. Right. Okay, a few things to talk through here. First thing I want to talk through is this China trade balance data. Now, the data was negative, but there was some possible green shoots of positivity in it. Now, you can just see it in this Reuters article here. Exports shrank, okay, which is what you'd expect with the US-China trade war going on. Less goods are leaving China. The tariffs have hurt Chinese exports because people want to buy less Chinese products because they're tariffed when they get to the US. So therefore, there's less demand for the product because they're more expensive. Of course, that makes sense. So they have shrunk again. But what was a little bit more positive, as this Reuters article indicates, is that imports rebounded. Now, imports in China, they tend to be raw material imports. So with these rebounding, and what you notice is that the raw material imports tend to follow the, let me see if I've got a chart somewhere. Yeah, I think I've got a chart here that I was looking at earlier. Let me just ignore that. I think it's this one here. Yeah, this is it. So what you've got is the import data. You see the white line tends to be a good leading indicator for Chinese manufacturing PMIs. Now, we had some quite good PMI data out on this last week following, and the import data tends to be raw materials. So in other words, if China are importing more raw materials, those raw materials are going to go into production. So the region purchase managers have more raw materials is because they're expecting, anticipating, and receiving more orders. Okay, so you can see here as imports fall or rise, the Chinese manufacturing falls or rises with it. So we can see here rise in imports, rise in manufacturing PMIs. If we get another rise in imports, then we expect the manufacturing PMIs to follow as well. And this makes sense because this makes sense simply because the US-China trade negotiations have generally been a bit more positive in the last sort of 3-4 weeks. Okay, so that's just a little bit of context for the trade. One to watch. Okay, watch out for that import data. And obviously, if the market's optimistic about US-China phase 1 trade deal and imports materials going up, then that gives a good risk-on tone for the market. And you guys by now will know what happens in a risk-on tone market: Australian dollar, New Zealand dollar, Canadian dollar strength. You might get some oil strength, Japanese yen, Swiss franc weakness. Okay. Governor Lowe speaking later. Not expecting him necessarily to be talking much on monetary policy, but of course, Australian dollar traders be aware of that. On Tuesday, we have the Germans view economic sentiment, not particularly expecting that to be market moving, but again, it just gives an indication of where the economic sentiment is. Germany is the largest contributor to the Eurozone, so what happens in Germany tends to be a good indication for the whole of the Eurozone. That's why German data is particularly important. On Wednesday, a little bit more interesting day, we have CPI data and the core CPI data. There's no particularly big changes or big moves expected in the CPI. So I am not expecting the Federal Reserve to do a surprise interest rate cut or hike. They should almost certainly stay on hold. Of course, if they don't stay on hold, there's an opportunity there. But I'm expecting, and a lot of market analysts are expecting them to be firmly on hold. They cut rates 3 times this year. There is priced in by the market 1 rate cut for the 2020. But aside from that, they should be on hold. But of course, look at the statement at 7 o'clock and the press conference afterwards. So again, if you're trading US dollar, Euro US dollar, pound US dollar ahead of the elections tomorrow, just to be aware of the statement and the press conference. But I expect that Jay Powell, I expect him to be saying, look, we're on hold, we're data dependent. Remember that we had some really good non-farm payrolls out last Friday. If the CPI inflation is, keeps to its print, then there's no case for a rate change, a rate cut certainly. So nothing expected there. But again, obviously any deviation from that, remember what I said about the example, you're expecting a roast dinner when you come to my house, you only get a packet of crisps, there's a reaction. Exactly the same with the market. That's what we're expecting. Any deviation from that expectation will be a reaction. Now, Thursday, 12th of December, obviously it's the parliamentary elections. One to be aware of, covered that quite thoroughly today because it's such a big geopolitical event. Won't labour on it. However, be aware that the Swiss franc, they've got their monetary policy assessment. The policy rate of the Swiss National Bank is the lowest policy rate in the world, minus 0.75%. Big disincentive to place your money into Swiss banks. And be aware that there's no particularly good news out of Europe. And there's unlikely to be any particularly good news out of Switzerland. So that's expected to be on hold, and that general bearish sentiment is expected to carry on. On the same day, it's a busy day on Thursday, we have the ECB financing rate. Now, this is interesting for a couple of reasons. Again, the ECB have got a very bearish outlook. There's been a lot of negativity for the euro, but this is the first monetary policy statement and press conference for Christine Lagarde, the new ECB president, taking over from Mario Draghi. Okay, so it's very interesting to see, does she change much from Mario Draghi's policy? Not expecting much. I'm expecting a very similar response from her. Prepared to step in to support the Eurozone economy, but a call for fiscal stimulus. Look out for that. I'm expecting that call to go out, across the world. We've seen Japan announce the big fiscal stimulus program. The RBA said that they would be looking at fiscal stimulus before unconventional policy or negative interest rates. Mario Draghi in his last press conference was pointing back to finance ministers. In other words, fiscal stimulus is when governments take action rather than central banks. Monetary policy is what central banks do. Fiscal policy is what governments do. So I'm expecting her to point to government to say, look, interest rates are as low as they can be. We don't really want to carry on going down to these negative interest rates. Do we really want to keep doing quantitative easing? The jury is out about how helpful quantitative easing is across the world. If you look at Japan, they've had a huge QE program and they have a huge deflationary issue. Inflation is absolutely stagnant. So the concern is that kind of stagnant inflation from Japan then spreads across the world, and this is being questioned about whether this is the direct impact of QE and what other impacts will it have. So we're in this sort of uncertain crossroads time. Very important to see what Christine Lagarde says. So again, that's a good one to be tuned in. You don't want to be trading the euro around that time, but you may want to be trading the euro out at that time because they may form a new direction, either bullish or bearish for the ECB. You'll find that on any good analysis programs or a good analysis. I'll give you a good website which would give you live analysis and would help you with that. I'm just sending that to all. That is a company, another company I work for, forexlive.com. I contribute daily, and our sole purpose is to guide traders as to what's happening in the market, why currencies are moving, how they are. So that's one to look at. Okay, 5:30 GMT. We have Bank of Canada's Governor Pollott speaking. Now, the outlook for Canada had been quite good until we got some very poor data out from employment last Friday. Okay, so the market is really going to be paying attention to what Pollott says. The employment had a big drop. It was like minus 71,000 jobs. It's the biggest drop in jobs for Canada since 2009, and the unemployment rate rose as well. So less jobs, more people unemployed. Okay, wage growth did remain solid, but that solid jobs market is what had been underpinning the Bank of Canada's resistance to follow all the other central banks around the world and cut interest rates. So the question is, what will Pollott say? Is it a one-off, or will he say, actually, we may need to start taking a more bearish outlook? Be aware, look at the US dollar, Canadian dollar currency pair potentially for that. And don't forget, if you're trading CAD, you also need to be aware of oil's price, because CAD and oil influence each other. Well, should I say oil influences CAD? So be aware of that as well. But be aware that the Bank of Canada has been quite bullish. They dialed back a little bit at their last rate statement, so they're a little bit more neutral. But the general bias is they're optimistic about the economy. Weak labour data from last Friday begins to throw that into question. Will Governor Pollott confirm that, or what will his response be? And the Canadian dollar is likely to react out of that. So be aware, it's a big one. And then we've got US dollar retail sales, which files into the general picture for the US economy. That is what I'm expecting for the coming week. That's the main events. Guys, I hope you're prepared. I hope you're ready. Quite a lot. It's a busy week. We've got the ECB rate statement. We've got the UK elections. We've got Swiss National Bank rate statement. We've got a couple of central bank speakers, Governor Lowe, Governor Pollott. Of the two, Governor Lowe is the one that I'm expecting to be of most market interest, as well as some US data, CPI data, and retail sales. Of course, don't forget that there could easily be an announcement on a US-China trade war, something between Donald Trump and President Xi. So be aware that that could always come into the market at any stage. So be prepared for a risk-on or a risk-off shift in market sentiment. Gold and oil, okay, good one. Well done. Thank you, Sheikh. You reminded me. OPEC. Now, with oil, let's have a look. Just have a look at WTI. You can see. Okay, you can see with oil, this is what's happened technically. We had a spike out above that overhead resistance around 58.50. Okay, we spiked above. Let's go down to the 4-hour chart. And now price is just sort of hovering on that resistance level. This spike was on the news that the Saudi Arabian government were going to stick to their 400,000 production cut quotas, as well as adding 167,000 extra barrels on top of like 500,000 OPEC and OPEC plus, production cuts. So this is what this spike in oil's been. And the question the market is trying to grapple with, and it's one I don't know, Sheikh, I don't know this. The question is will this be enough of a production cut to push oil higher, or is the market disappointed? And I'm unsure. If you put a gun to my head and say, which way do you think? I think oil is heading up. This will be a key point here. So, a close down below this level, and I'd say, okay, it looks like potentially more downside. I'm not surprised to see a little bit of buying here, because this is obviously a key technical level. So oil very much in the balance. It will very much depend on production levels, and the headlines that we're bringing it is, do the countries stick to their production levels, or do they, backtrack on their production levels? There's Saudi Arabia have got the initial price offering of their Aramco company. They have reported to really want a high oil price, so that makes the company's sale really successful. So from here, I'm expecting a return back up to these highs, and then it'll be the jury out whether there'll be a fall back down. That's what I think with that. Hope that helps with oil, but I'm a bit uncertain on it, Hashik, because I just don't know. It's certainly not clear enough to say, wow, that's a high production cut, or oil's likely to be bid. And there's a few variables. Obviously, how's the US-China trade war going? If the US-China trade war, a phase 1 deal gets signed, that's a bullish sentiment for oil. If it doesn't get signed, that's negative for oil as well. So that's some of the factors I'm thinking about. Gold. Okay, the gold fell on Friday with a really strong NFP report. Good jobs number, and obviously gold is paired with the US dollar, so that's just sold off. That's where we are with gold in the short term. Long term, the question, what's going to drive gold from here is there's a few things, okay? So the first thing is US-China trade war. If that gets worse, if President Trump says something like, we're not doing a deal, we're putting tariffs up, then I expect gold to be bid, okay? So that's a safe haven play. We also have the US-China tariffs. If the trade tariffs are rolled back, so say President Trump says, well, we're not going to put those 15% of tariffs on, we're getting towards a deal, then I'm expecting gold to sell off. So very much at the mercy of the US-China trade war, in my opinion, with gold at the moment. So generally bid, but it's trying to make its mind up now. And what will help it make its mind up is the US-China trade war. Obviously, the Federal Reserve as well. So if the Federal Reserve on Wednesday, Hashik, if they said, oh, wow, yeah, the outlook has got bad, we're going to be cutting interest rates. I know they wouldn't say something like that, but if they did say, we're going to be cutting interest rates, then gold would rise because it's paired against the US dollar, and you see the US dollar selling off. Okay, so FOMC could potentially move gold. US-China trade war could potentially move gold. And finally, for gold, January, the last 7 years in January, gold has increased around 3.6% in the month of January for the last 7 years in a row. That's because of the Chinese Lunar New Year. There's a tradition of buying gold as a gift. This results in gold prices being supported. So heading into year end and January, it tends to be a very positive month for gold. So be aware of those seasonal patterns. For me, Hashik, the big issue I'm looking at is that US-China trade war. I want to see some more clarity on that. That's why I haven't entered a gold long, even though I know that for the last 7 Januaries, gold has been bid. Okay, so that's where I'm at with gold. I hope that helps. And before I head off, guys, I have to say that tomorrow, unfortunately, I am doing an interview with CNBC Arabia, and I'm speaking on the US-China trade war. But unfortunately, I'm traveling around the time of my workshop, so I won't be able to do my workshop as usual tomorrow. So my apologies for that. But I do intend to be back for next week, for Monday at 12:30 GMT, and the workshop at 1 o'clock GMT. So I hope to see some of you there. Guys, I hope you have a really good week. Look out for all those events. Sean, good to have you. Sammy, Salvatore, Olufemi, thanks guys to have you. Yeah, lovely. Really good to have you. Blessing, Ali, and Hashik, great to have you on board, guys. I hope you have a really good week, and I do look forward to seeing you next week. And don't forget, if there's any trades you're in, anything you're taking, anything, particularly on the workshop on Tuesday, we can look at it. And why don't you let me know how this week has gone for you? We can maybe look at some of the trades you've taken, and I'm happy to give my comment. So try and help and make it as helpful as possible for you guys. Okay, now guys, you have a great week and take care, and hope to see you soon. Bye now.